will speak to you here today is about the journey that we had in China as AB InBev for the last now 7 years. And that was a major transformation not only for our business in China, but actually for the company worldwide. Jeff, are we there? Because that is where the presentation starts to help a bit.
2 more megabytes.
Okay. So I will start with, in 2005, we were in a crossroads here. Our first investment in Asia, in China, was in 1998 when we acquired a 20% stake. You guys familiar with Pedro in Guangzhou? So Pedro is our first investment in 1998 to acquire 20% of that company. Was our first trial in China. That was followed, by the way, by that time, the 2 largest breweries in China was Zhujiang and Qingwei, which today neither of them are really independent anymore. And that move into Guangdong was with this thing, let's invest in the largest company in China. And that was followed after that by investing in what was the probably most promising economy during the early 2000s, that was Zhejiang. So we did a series of investments in smaller companies in Zhejiang province, but then probably first trap for multinationals. We were taking minority positions, or in some cases even like share ownership about 50%. But after the deal, we would realize we had no management rights. So at a certain point in 2003, all our sales in Zhejiang were more than 50% of the sales in the province, but we had no management rights. And at that moment is where both Snow Breweries and Qingdao, they were like in full asteroids, growing very successfully in China and really beating us badly. At that moment, our business here is not growing. We have serious concerns about what is going on in those businesses that had no management control, and that became a cash drain. And then the board got the Asia president and said, listen, please bring us a plan within the next 3 months. Either we make China sustainable, meaning it has to be cash sustainable, or we're going to withdraw from China. So this is 2005. The answer to that question was another acquisition. And this time it was very intense because it was a very fortunate timing that in 2005, the most profitable brewery in China went up for sale. And this is the Shuijing business in Fujian province. And there was a super competitive process. And there was at that moment one of the largest investments in consumer in China. We paid $800 million for Sedrin. And that literally transformed our lives in here. We still had all the previous problems, but when you look at the entire China operations, at least Sedrin generated enough cash to compensate for the drainage in the other business and give us a breathing room in order to see, okay, how do we grow from there? Okay, thank you. So 2005, this crossroads, and as we acquired Sedrin, we bought ourselves time because there was a super profitable business concentrated in 2 provinces, Fujian and Jiangxi. So we had cash, but we still had a big problem. We were still heavily concentrated, and different than Snow and Qingdao, that were being very successful in making their brands national, we still had only very limited local brands. And that was the second question that we had to answer. How can we expand in China in a profitable manner? Fair to say we cannot take any credits because we never found an answer, but we were blessed because in 2008, InBev acquired Anheuser-Busch. The entire business case for that transaction was the US market, but when that business happened, Anheuser-Busch had a very interesting footprint in China. In the same manner that InBev had invested in Double Deer, in Red Rock, and in Sedrin, Anheuser-Busch had done a massive work in creating Budweiser from ground zero in China. So actually there is a brewery in Wuhan that has been brewing Budweiser now for almost 20 years. And it became a massive business, but it had started, and at that moment there were already 2 breweries, one in Wuhan and one in Foshan. And Budweiser extremely successful in both Guangdong and in Beijing. And second to Budweiser, there was an interesting investment similar to our case in Zhejiang. Anheuser-Busch invested almost $1 billion in Harbin breweries in northeast China, so in Heilongjiang, Jilin, Liaoning. And similar to our business in Zhejiang, that was not boding well for Anheuser-Busch. However, when you look at the brand, where's the pointer here? The brand Harbin, when you look at those brands, there are several reasons to believe in terms of positioning, who connected with the brand, target consumers, that could be a credible national brand. So then the question that we didn't have from 2006, we had that now. We had the cash coming from Sedrin, but then we had a credible platform with Budweiser and Harbin to expand our business in China. And as we had that in our hands, so the acquisition was announced in 2008 and closed in the end of the year. During 2009 is when there was a new president in Asia at that moment for our company. Miguel is, how do I get these things together and conceive this idea? And in the end of 2009, he presented a plan for 2010, how we're going to roll out a really China big bet dream. We really wanted to go massive, and to put some numbers to that, at that moment we were investing in average $150 to $200 million in China every year. That was pure cash drainage. And he was recommending that we should increase that number to at least $1 billion per year. And that is when actually, this is when I first got involved with China. I was in the New York headquarters as the vice president for corporate strategy, and then was one of my projects was to work with Asia, and how can we make this plan happen. And what I'll tell you, during 2010 and 11, I was so excited. By the end of 11, I raised my arms. Guys, can be part of the team, and that's actually how I got into China in early 2012. The first thing that Miguel told the board, if you're going to do something in China that is not a country, it's truly a continent, and at that moment we only cover 26, 27% of China, I need to have the one support, more than the money. What I want from the board is I want to handpick what are the people that I want with me in this venture. And Miguel had already had one full year integrating the Budweiser, the Anheuser-Busch, and InBev business in China. Second to the portfolio of Budweiser and Sedrin, Anheuser-Busch, in their previous 15 years in China, they had grown an amazing pool of talent, of local talent. I don't know how much of you are familiar. The very first investment of Anheuser-Busch in China was a 20% investment in Qingdao. And through a partnership in Qingdao, Anheuser-Busch developed an amazing program of trainees with super high caliber people. And then this president, he said, I need a combination of local talent and specialists in certain functions. So it was a plan designed in several different aspects. So first thing, you go back to the mid-2000s, quality was imperative, a lot of food scares, lots of concerns in here. So the first pillar of this program is we need to be obsessed. This company has to be a reference in quality. For the record, we have in the world over 60 breweries brewing Budweiser. Our Wuhan brewery are very proud. For the last 6 years, Wuhan brewery is consistently within the top 3 in the world every year. The way that we manage quality with Budweiser, every week, every single brewery has to send samples to St. Louis that are ranked, are tested, that are very strict standards. Our brewery in Wuhan are extremely proud. Many people question about the production in Chinese steel, especially for food. For this brewery, one of our top breweries in quality around the world. So the first pillar was quality. Second pillar was insights. Like the way people drink beer around the world is very, very, very different. What would you guys say, like, well, you take the United States, beer is heavily concentrated at home, people watching sports, sitting on their coats. Where would you say that beer is concentrated in China?
Restaurants, right?
More than 50% of consumptions are in restaurants. When you are drinking beer at home, it's all about who wins in Walmart or who wins in any sort of off-trade that you get in there in the supermarket and you get the fellow to buy your brand. When you are here in China in a restaurant, first thing, you might have a table of 25 people, only one person will make the order and determine what everyone else will drink. So how do you sell beer? Where does people drink beer? How do you sell beer? How do you win in the moment of truth in here and more? We were late to the game. Snow and Qingdao were way ahead of us. And then there was one aspect, and that goes a little bit about the background of our company, Snow and Qingdao were basically with a strategy that they defined the very minimum margins they could operate, and they were all predicated on growth. In our case, for the rules or the hurdles we had in the company, we would not entertain operating in such margins, so we could not compete with them on price. What is the second place that people drink alcohol in China and beer? Well, KTV. So that is the second place that people drink a lot of alcohol in China is KTV. The interesting thing, back in the early 2000s, Heineken completely dominated KTVs, but the volume of KTVs was small. And in China, part of the KPI is dictated by, and by the way, both Qingdao and Snow breweries, they are assets managed by the SASEC. And part of their KPIs was volume growth. So in KTVs, volume didn't grow as quick as in restaurants. So they would not be so interested in KTVs. At the same point, Heineken was extremely focused in Taiwan and not focused on mainland. And what we saw in there was a huge channel that was only 5% of the industry, but 5% of the largest industry in the world is a lot, but was disproportionately profitable. And then, thinking about consumer, we came with a strategy that we could compete in price because the price was so higher that we could offer attractive discounts to both the distributors and the owners of the points of sale, that they would switch our brands. Because when you usually go to a KTV, you don't have that repertoire amazing brands to choose from. You usually have one or two by the same supplier. So understanding the market from consumer insights, trade marketing, and price optimization, we are able to understand what is the one place that we should put our focus on growth and expansion, that we could grow our volume, gain scale, and still deliver the margins that were required by our board. So assembling this thing together, people that understood about quality, people that understood about trade marketing, how to deal with your customers, people that understood distribution. When you're dealing with the distributors in China, they're extremely different than dealing with distributors in Brazil or in Uganda or in the United States. So combining people that understands distribution, understands the Chinese system of distribution, and that really put together a plan that made Budweiser, that made China the largest market for Budweiser in the world. 2 years ago, there was a moment of rupture in our company. For the first time, we sold more Budweiser and made more money in Budweiser than we made in China. Where is Budweiser from? What is the proud city of Budweiser? Wrong, it's Guangzhou. So Budweiser today is proudly from Guangzhou. Guangzhou is our largest market for Budweiser. And that, I'll tell you, a lot of people in St. Louis complaining the company that had to stop growing in China. How come? But was an impressive measure that the way that this plan was architected and really like all different elements of, if you wish, consumer markets, and helped us to drive Budweiser. We are basically selling 3 million barrels, and this is 2006-07, we are selling over 20 million barrels today. And with margins higher than the margins that we make in the United States, in a country that prices are quite compressed. So that was an impressive case, and bringing some more details from you. When you understand values for people, then you are able to position your brand in a manner that you resonate and people get interested. So that you get an idea, the very first value is the same almost everywhere, which is protect your family. And then there's a codification of values, and what we invested time to really go over the matrix of how China was evolving, and the feeling of freedom for younger people to be able not to follow what your father or your mother are telling you, but to be free to live the life of your dream. That thing was like a home run, was a grand slam. Like you literally hit the ball out of the park with all bases loaded. Like it was big. So it was positioning the brand on the right way, focus on premiumness, because by generating margins, we could invest a lot of money behind the brand to build its momentum. Focusing on trends that we could own, and in China there was a massive electronic music trend like boiling over the last 5 years. So we really focus every single artist, every single event that we could associate ourselves. Not sure if any of you ever been to a Storm event that for the last 4 years is Budweiser Storm. We started with only Shanghai. This year, more than 15 different Storm events, but really creating a reference for electronic dance music events in China. And finally, trying to resonate to a key moment of celebration in China, which is the Chinese New Year. So for the last 10 years, the key promotional moment for Budweiser is the Chinese New Year. And one thing that I'll tell you, also trying to understand China, which zodiac year was 2014? Horse. What is one of the key icons of Budweiser? We brought 8 sets of 10 horses from St. Louis to China. We got authorization from the government. There was an amazing night at 30 below zero in January in 2014. But we did like the arrival of the horses in the Great Wall. Like there was a part of the Great Wall, the gates. And the way that we were able to connect the year of the horse, and then I forgot the meaning in Chinese, but the horse brings you wealth. And we're able to line up a campaign, which is something true to the brand. Like if your brand never saw horses before, you're just not going to bring horses because it's the year of the horse. A brand like the Clydesdales, that was one of the foundation of the brand in the United States. And how do you bring the elements of the Chinese culture that are natural to your brand and in an occasion that makes sense to your product? So across the years, the share of consumptions that we captured in Chinese New Year was totally disproportional. And a lot of Chinese innovation for us, by the way, is by far the largest rate of innovation for Budweiser around the world. All of them was about Chinese New Year and celebration. Beers specifically designed for KTVs and for Chinese restaurants. I don't know if any of you ever saw Budweiser Brewmaster. Budweiser Brewmaster is sold in a bottle. You can try to check that in Baidu. But it's a bottle that is retailed between 120, 150 RMBs. It's a higher alcohol drink. It's to be drunk on a glass of cognac. It's not to be drunk cold. And it's like, literally, is how we start to get into cognac territory. We created knowing that the Chinese profile, Budweiser, the original one, is quite a strong beer for the Chinese profile. We have Budweiser Supreme that you're going to find in a lot of the higher tier restaurants, which is a Budweiser in a transparent bottle, which almost looks like a bottle of wine. But anyway, all innovations of Budweiser were focused on this positioning of being free to live the life of your dream, focus on premium, a lot about trendy, strong trends, especially around music, and celebration with the Chinese New Year. So that was the positioning, that was the strategy. And then the other point, how do you actually define which cities you're going to get to? And then also back in 2010, we mapped 300, we basically acquired a database from, the access to a database from Boston Consulting Group. And we mapped 300 prefectures with many different metrics, especially about disposable income today and the projection of disposable income 5 years ahead. And what we're looking for was not for the highest points today, but for the highest addition of wealth. And what we had compared to other countries, when you have your income growing, there is a certain point of inflection where consumption of indulgent categories spike. So we saw that in China for many prefectures, and what we're trying to do is, which are the ones that didn't go through that yet? And that would be a predictive measure for the places that the market would grow fast. As I told you, beer hasn't been growing anymore, and it grew a lot in the early 2000s. Around 2007, 2008, East China was not growing at all. But Western China was on steroids. A lot of the investments dictated by the previous 5-year plan of the government was about development in the western and northwestern regions of China. And with, if you wish, this strategy in mind, we develop a plan. So all these colored provinces are provinces in which we decided to build breweries. So in the last now 8 years, we built 12 new breweries in China. And that in itself was close to a $3.5 billion investment. Back to what I mentioned, that we're increasing investment from 150 to 200 million to 1 billion per year. We basically deployed $3.5 billion in capacity and another $2.5 billion in acquisitions in China to get a footprint that will allow us to service most of China. We're still not present in the far west. We're still not servicing places like Qinghai or Ningxia or Gansu. But for the entire north and southeast of China, now you find either Budweiser or Harbin. We went from basically 25% of coverage of China to over 65% between this 2010 to 2017. And that was, if you wish, the financial consequence of that. This is information from our public disclosures. So what you can find China in our 2009 annual report, when the president of Asia was putting together this plan, the combined profitability of InBev and Anheuser-Busch was $2.4 billion of sales. That by 2015 increased to 4.2. We stopped disclosing China in 2016. And profitability went from $400 million of profit to $1 billion. And the one figure that is not in the financials, but I can quote in here, that was $400 million of profit, but it's still $100 million negative in cash flow because all the bottles that you need to buy, the glass bottles that you need to buy. Now it's $1 billion of profit with close to $700 million of positive cash flow. From what I've seen of China, I think that this kind of profitability, I think only technology companies in automotive of international companies will be able to generate in China back in the day. But so far, like I'll tell you guys, that for me is probably the most exciting part of my career. When back in 2009, when I was still in Canada, I don't recall the situation, but I'll tell a friend, you know what, they are asking me now, they're telling me I have to leave Canada. I had been there for 6 years. It's time for me to get something new. They don't like when people get accommodated somewhere. I can go anywhere. I'll never go to Asia. Well, 2 years after that, there I was. And I'll tell you, since 2012, having had the chance to work here, to work in India. In my time in here as CFO for Asia, I worked a lot with Korea and Vietnam. I actually changed like my profile in the company system. I'm not mobile anymore. Don't get me out of Asia. If you're working with consumption, that's what I'll tell you. If you're working with consumer and you're serious about it, there's nothing for you to do in America and in Europe where there is no more growth. When you look at any projection of any category, if you're serious about winning with consumer, you're serious about winning in Asia.